Okay, so this is the trade I took today. After class, I took a trade on gold. It's really pulling back, so I'm going to be closing our soon. So I took a sell here. You can see it was a very good sniper sell, and price came all the way here, but then it's pulling back to this level. So we're floating around. I entered it with a very small loss at 0.2, and of course, this account I've been able to take it from 10,000 to 26,000 now. We almost around 27,000 already. So you can see the trade running at 351. This is a little bit above 2%, 1%, sorry, of this account. And of course, it's because of this pullback that the market is currently pulling back. This is where our profit was, but as this point, I was still on my way getting back home. So we go to around 600, 500 and like we got to even about 600, 600, got to 600 on the dot, but then market is pulling back, so I'm going to be closing our raise soon. So this is it. Let me show you guys the transaction. I set my stop loss just a little above for risk 1%, which is $209, and then the take profit was 719 $18. That's around 1 is to 3.5 thereabouts. Yeah, so yeah, this is the account here. Floating around 400 again. So you can see 27,000. I'm going to be closing now. This is the history. You can go through the history. I see deposited on 23rd of last month, $10,000, and you can see the profit is 16,000, deposit is 10,000, and then yeah, we have balance currently at $26,000. Okay, so you can just see a quick breakdown of the trade. 500, 400. This is synthetic indices initially. So I traded synthetic indices all through initially. 400, 500, 600. Then I lost 200, 200, and then we made some very good profit. This week was a very good one. 1,600, 1,600, and these two were 1,500, and then we made 300 and 700. That's 1,000. Then we took some couple of losses. 300, which is the max losses. Okay, no, there was a loss I took at 400. That's about 3 point something percent. Right? So generally, yeah, we like this trade. I got in with multiple positions, right? So I really got hit on the trade. Like I really got hit bad. I think I traded early in the morning, and then I got hit. I took some losses, and then I took losses again. This day was really a very like okay, it was 2 days trade on the 26th, 26th. On the 26th, I took three trade. There will be those time where you just be on losing streak. So on the 26th of last month, I took three trade, all hit SL. On the 27th, the same thing, all hit SL. So I left the trade that day, and then on the 28th, I came back. Oh, it was a very good profit. So that's one thing. You keep showing up. You keep showing up in this industry. Even though you're taking loss, you learn from the losses and then you move on. Losses are calculated as expenditures. If you learn from them, if you go back to check what you did wrong or if you did right, sometimes because this is the thing. Sometimes you might be right, but then the market still decide to take you out. So there's no two way about that. But then you learn from your losses. If you're able to learn from your losses, then you count them as expenditures. Then moving further, we on the 28th we made some good profit, 1,700, 1,700. This recovered everything because even if you check everything we lost, let me see, 200, roughly I think maybe around $8,000 thereabout. If it's up to about, I doubt it's up to $1,000. And then one of these trades should be able to recover that. Yeah, you can see this. You can punch out the whole figures with your calculator, doing a raw figure. Let's just pick out the 100. We have 100, 200, 300, 400, 500, 600. So plus 300 is 900 plus this. Okay, it's up to $1,000, around 1,200 thereabout. So just one of these trade recovered all the losses, and then the 1,700, the second one, is a good profit, and then we got some profit. Then on this day, on the 30th, after making this $800 profit, we got some losses here. So one thing you see that the profit are always way bigger than the losses, and if you notice the loss size are kind of consistent. Either it's two lots, five lots on the normal step index, or one lot. So nothing crazy. And then the currency pair gold took a buy, then go $100 on that, and then you can see some good, like this is evidence of really good trading here. You can see, right? So you can see the lot size. It's not crazy lot size. If I go to show you the chart history, you get to see that this position were maximized. Not, it wasn't scalping. Yeah, you can see the number of pips here. For this, on this gold that took me out here, this was a 30 pip stop, and it was at 140 something dollar. You get that? So yeah, then took another trade on gold again. Three trade went in profit, and then this is the biggest loss so far on this account on gold. The stop loss was so big. The stop loss was 100 stop loss, 100 pip stop loss. You know, gold can be very volatile. By 100 pip stop loss, you can see that from 4337 to 4347, right? So 47 to 37 is 37 to 47 is 10. Multiply by 10 is 100. So 100 lots, then you can see that it's minus. This is the biggest loss so far, and then of course I now made a $2,000 profit, so this recovered everything. And then yeah, you can see today it has been so far good, blues and blues and blues. You see that? So yeah, that's for the trade history. Let me see what's the trade running on. It's pulling back again. I think we have to close. Let's just be, have that vibe of 27k, 27k. You get that? So yeah, guys. I'll be closing out. I'll be closing out because overall, my TP was around this demand zone here. Um, and of course, we still expect market to sell, right? We still expect the market to sell, but then you can see I set my TP around this demand zone. Market came somewhere close and then it's rejecting. So and then I took this sell. The reason I took this sell was because we had the high of the previous day here, and then we had market, consolidating around that zone. Okay, so we had this impulsive move. You see, this is a corrective move to the upside, so we expect some drop to the downside, right? So this is becomes drop like base, and then we have a drop here, and then they have the previous day market rejecting. So yeah, when I saw the market broke structure to the downside, not breaking to the upside, and this is a resistance zone. When it returned back to mitigate here, that's when I took the sell. You can see the sell arrow there, the sell button. Yeah, it's went down crazily, like very good in profit. Okay, guys, yeah, so dub it. I'll be adjusting my stop loss now to break even. My stop loss, I'll be moving it to not even breaking. I'll log in some profit. Let's say $200. Yeah, let me log in $200 profit. So I'm going to be aligning it. Let me know in the comment section below, what should I do? Should I leave the trade to run, or should I close out now? What do you guys think? Okay, so I'll keep you guys posted. I'll make another video on the outcome. So this was the other trade. I think one of the big trade. Let me see the history for that. Let me go to the. Okay, yeah, this $2,000 trade. Yeah, that's a move here. You guys can see it right here. This crazy move. It was a $400, 400 pips move, right? It actually got to about, I think, even, let me see, let me guess, to this point, 440. Yeah, it got to 800 pips. It was a crash on Friday. So but then I go back to the market at almost the closing hour of the market. So yeah, I just closed that when about 50% of the move pulled back, right? So yeah, that's it for this trade. You can see it's really been amazing. I scalped at some point. That's why you see some good profit there. Neo section scalp before the overall trade. You can see that, like this scalp, this was on BTC. And I took some losses here as well. Yeah, so guys, that'll be it for this video. Consider subscribing if you haven't. So this the ultimate breakdown of the gold trade I took.